Hello, I'm Jonathan Moyes, Head of Investment Research at Wealth Club, and today I'm with Shane Galway of Guinness Ventures to talk about the Guinness VCT. Hello Shane, welcome back to the studio.
Hi Jonathan, nice to be here.
So we normally talk about the EIS fund, but today we're talking about the VCT. What is it?
So the Guinness VCT is a generalist venture capital trust investing in high growth UK businesses. And we invest across three key areas, being business services, consumer and healthcare. And we already have 22 investments. We're building our portfolio. We're due to pay our maiden dividend in April 2026.
You've just had your first exit.
And we've just had our first exit.
And for those who aren't familiar, who are Guinness Ventures and what's your role there?
Yeah, so Guinness Ventures, we're part of a larger business. We're part of Guinness Global Investors. There's over 8 billion under management across the group and about 90 employees. And I set up the ventures side in 2010. And since then, we've invested over 300 million. We've invested in more than 100 companies. We've got a very experienced team, and the senior members of the team have been together over a decade. And we're focused on investing in UK growth companies across EIS and VCT.
Good. And so turning back to the VCT and the portfolio, what sort of companies are you looking to back? And are you essentially co-investing alongside the EIS fund? Is this how it works?
Yeah, so we follow a similar investment strategy to the Guinness EIS. We filter for scale-up businesses, and it's a slightly crude measure, but we use £1 million of revenue to filter for more mature businesses that are ready to scale. And we do that as these are businesses that have already proved up the product or the service or technology and are looking to scale that up. It's quite an important distinction because about half of the businesses who raise seed capital don't actually get to a Series A raise. So that's a filter we apply. And we see a lot of businesses. We see over 100 a month.
There isn't any particular sector that you favour. It's more the stage of the company that you like.
There's probably three areas which, as I'd mentioned, the business services, consumer and healthcare. And those, they pretty much cover where the UK is strongest. You know, there's really a deep pool of expertise and good management teams. There's an ecosystem that helps those businesses thrive in the UK.
Good. And so turning to recent examples in the portfolio, you've always got a good recent example, Shane.
I can give you a couple. So earlier this year, we invested in a business called JAAQ, JAAQ, which stands for Just Ask a Question. And it's an interesting business on several levels. It's a platform, it's a sort of video platform focused on videos dealing with mental health issues. And the internet is a bit of a wild west for video. This is a curated platform. And because of that, it's been picked up by large enterprises and some of the insurance majors, including Bupa, who's probably their key customer. Addressing this area in a kind of thoughtful, curated way. Another thing we really liked about JAAQ is the CEO is someone who we've previously backed. He's an experienced entrepreneur. He sold his business ContentCal to Adobe in 2021. And I think management teams are so important in this area, and we felt we were backing a really strong management team.
So what's the core proposition of that business? Who's using it? Who's paying for that service?
The clients are enterprises and insurance majors. And in essence, the proposition is helping people who may have anxiety or any sort of mental health issue, helping them address it, which ultimately will help them get back to work and into a social environment more quickly.
Oh, very good. Any other examples?
Another one we have backed this year is something called Mintago. And Mintago is a financial services business. Again, it's business focused rather than consumer. they help individuals with savings, pensions, and debt, but focused on employers. And employers love this business because it helps with employee retention. It helps reduce some of the burden on HR. And it does a social good as well. It encourages people, for example, to save into their pensions. And employers have a duty to help that. As a result, they've experienced phenomenal growth. And again, it's a team that have previously founded and sold a business. They built something in this area. They're experienced. It's not that we only back founders that have built businesses previously. Some of our biggest successes have come from first-time founders, but these particular examples are people who've previously found and sold businesses.
It's an interesting feature in the ecosystem now, though, that you're seeing second and third-time founders come through. It seems to be more of a theme.
Interesting, yeah.
And so turning to the wider portfolio, the VCT, incredibly, is now over 3 years old.
It is,
22 portfolio companies.
Yeah.
Do you have any examples of some of the more mature companies in that portfolio and how they're getting on?
Yes. So another business which actually we'd invested in from our EIS originally and then followed on from our EIS and VCT is a business called Dragonfly. And Dragonfly was a spin-out from Queen Mary University. They developed the technology in conjunction with Queen Mary. And it measures visual impact of adverts or packaging or websites for corporations. And they have a patented algorithm that has that they use to do that and sell to Coca-Cola, Unilever, large consumer brands. It's been a very successful business that is gaining increasing traction in the US.
Interesting. And so I guess the ultimate goal is exits. It's been a difficult period for exits generally across venture capital. You've recently had an exit within your VCT.
We have indeed.
Could you tell us more about that?
I can. It's a business that we've spoken about before, Jonathan, Plotbox. And Plotbox provides software for crematoria and for cemeteries. And we sold down some of our stake earlier this year to enable a US private equity firm to invest. And they've helped grow the business through the next stage because the big market for this business is in the US. So it's a partial exit to enable it to turbocharge its growth.
Do you think that will become more common in the UK, these secondary exits? Feels like a bit of a theme at the moment.
There's definitely two broad buckets of exits that we've seen. One is to trade buyers, and we've had investee companies bought by Adobe, by Thomson Reuters, by Barilla, by Ocado. But the other is financial exits, where a larger private equity or venture capital firm is buying into the business in order to take it beyond what is EIS and VCT qualifying.
So you can't talk about exits and successes without also talking about risks. So how do you describe the risks within your VCT to investors?
I think broadly speaking, because VCTs and EIS are the qualifying criteria means that you're investing in smaller, high-risk private companies, there is an underlying high risk to investing in VCTs. I think there's lots of ways of mitigating that. One, and most obvious one, is diversification. By building a portfolio of businesses, that helps mitigate some of the risk because you're not overly exposed to a single business. Another way is, as I mentioned earlier, is investing in slightly later stage businesses to avoid those very early stage risks, those very early stage businesses that haven't proved up their product or service yet. And I think a third is doing good due diligence. And we have a really experienced team, and we really focus on ensuring that those businesses are robust and have the wherewithal to grow.
And so, Shane, summing up everything we've just discussed, for those that are looking to back a VCT this year, why should they back the Guinness VCT?
Well, I think a couple of reasons. We have a really experienced team managing it. We have a brilliant pipeline of businesses and a base of investee companies. And we are due to pay our maiden dividend in April 2026. So we're a maturing portfolio that investors can get behind.
Very exciting. Shane Galway of Guinness Ventures, thank you very much.
Thank you, Jonathan.
If you're watching on YouTube, please press like or subscribe to the channel for more.